Switching to an S corporation can save you a boatload of money. How do I know? Well, by simply going from an LLC to an S corp, we were able to save one client over $95,000 in taxes. So, how do you do it? How exactly do you go from an LLC to an S corp? And what should you know after you make the switch? I'm going to walk you through step by step. So, watch until the end of the video and be sure to like it so other business owners can benefit from it, and subscribe so you don't miss future videos that can help you save and make money. Hey everyone, I'm Karan from Life Accounting. Let's talk S Corps. Now, the main reason to elect to be taxed as an S Corp is to save money on taxes, which is one of my favorite things to do. Now, as a quick reminder, there are three main types of taxes you will pay when you file your business tax returns. You have federal income tax, state income tax, and self-employment tax. Now, I have a trivia for you. Do you know which one of those taxes an S Corp helps you save on? I'll give you a second to think about it. Okay, you can stop sweating. Switching to an S Corp will help you save on self-employment taxes because S Corps do not pay self-employment taxes. Only the income paid to LLC members through payroll is subject to self-employment taxes, while the profits paid as distributions to an LLC owner remain safe from self-employment taxes. And for this reason, I love S Corps. Now, not everyone will benefit from switching to an S Corp. In general, the moment your business begins to earn over $50,000 in net income is when switching to an S Corp will be the most beneficial. Note that I said net income and not revenue. If you have less than 50K in net income, switching to an S Corp can actually end up costing you more money. At less than 50K in net income, you don't have enough self-employment taxes to justify the switch, and you will incur extra fees to maintain the S Corp and file taxes on your S Corp. So in general, if you want to learn more about how S Corps can save on taxes, we have quite a few videos on this channel that goes over S Corps in detail. So be sure to check them out. Now, the process to become an S Corp can be tricky and must follow certain procedures, so I want you to pay very close attention here. Before you file to elect S Corp status, you must first meet a few requirements. You must be a domestic corporation. You must have only one class of stock, meaning all owners must share equally in terms of profit and losses based on the percentage of ownership. You must have no more than 100 shareholders, including your spouse. And you must not have non-resident aliens as shareholders, partnerships as shareholders, or another corporation as a shareholder. This means that all shareholders in an S Corp must be individuals and legal residents of the United States. For most people, I don't believe those requirements will be a problem, but it's still good to know that they exist. To become an S Corp, you will need to file Form 2553 with the IRS by a specific deadline that we will go over in just a second. IRS forms can be intimidating, but there are just a few basic pieces of information that you need to complete, like your business contact information, your federal employer ID number, also known as the EIN number, the year you want the S Corp election to begin, your tax year, shareholder information, reasons for filing the document late if applicable to you, and information on your current corporation. Now, get this, your filing options for Form 2553 are limited, as it cannot be filed online and must be filed either fax or by mail. Yes, you heard that right. You still have to fax and mail things to the IRS. Crazy, right? Additionally, the form will need to be signed by all shareholders. And if a shareholder resides in a community property state like Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, or Wisconsin, the shareholder's spouse will also need to sign Form 2553. Some states also require you to notify them when you elect S Corp status with the IRS. So keep that in mind. Now, filing Form 2553 is only half the battle, as the IRS also wants you to adhere to a few deadlines to solidify your S Corp. This deadline differs depending on whether your LLC is new or already existing. Now, new businesses. If your LLC is newly formed, you must file an S Corp election within 2 months and 15 days from the date of formation for that election to take effect in the first tax year. which is about 75 days from your formation date. So, as an example, if your LLC was formed on September 1st, 2 months from then is October 1st, plus 15 days is October 16th. So, in this scenario, your S-Corp election must be filed by October 16th to take effect in your first tax year. Now, for my existing businesses, if your LLC is already existing and you want S-Corp status in the current year, S-Corp election must be filed in the previous year or in the current year by the 15th day of March. As an example, your LLC has been operating, say, for 2 years, and you want to elect S-Corp status for the 2022 tax year. To do so, S-Corp election can happen anytime in 2021 or no later than March 15th, 2022. If you miss the deadline, your new status will generally not go into effect until the following year, though the IRS often grants relief if you file Form 2553 late and meet all of the 4 following requirements. Corporation fails to qualify as an S corporation solely because Form 2553 was not timely filed. The corporation and all of its shareholders reported their income consistent with S corporation status for the year the election should have been made in all later years. Less than 3 years and 75 days have passed since the effective date of the election, and the corporation either had a reasonable cause for filing late or inadvertently failed to timely file Form 2553 and acted diligently to correct its mistake. If you do meet the requirements for relief, you will need to attach a signed statement by all shareholders with Form 2553 that explains the cause for the late filing. All right, I don't want you to make up an elaborate story for your statement. Simply stating that an officer of the company or your company's tax professional or accountant failed to do it is good enough for the IRS. Now, I'm going to throw some words on the screen that should be added to the top of Form 2553 when you file it late. Now, sometime in the future, you may decide you want to terminate your S-Corp election. If that is the case, all members of the LLC must agree to the revocation, and the LLC must file 2 documents with the IRS. The first document is a statement of revocation that includes a statement that the LLC is revoking its subchapter S election made under Section 1362A of the IRS Code, among other information about the business. Now, the second document that must be filed is IRS Form 8832, which tells the IRS how your LLC will be taxed going forward. Armed with this knowledge, you should have everything you need to elect to be taxed as an S-Corp. We'll be making a video shortly that teaches you how to maintain your S-Corp, so be on the lookout for it. For now, here are a few videos that I think you should watch next to help you on your entrepreneurial journey. As always, I'm Karan from Life Accounting. Until next time.